We've got Fed rate cuts coming. We've got the changes to the SLR, which is the minimum requirements for banks. We've got a potential balance sheet expansion coming. We've got China expanding its balance sheet. We've got the Trump tax cuts to come into place. We've got, I mean, the list is endless of liquidity that's to come. And we've got to roll $10 trillion of debt. So my view is we had this extended year, which was this year, because they didn't need to roll the debt because the debt got matured to 5 years. So we just had ongoing liquidity. And I think 2026 is going to be a banner year.
Can I ask, because
I still think the end of this, I think November, December are going to be very strong here as well.
Bitcoin has been stuck in a narrow range. Altcoins aren't moving much, and stablecoin supply growth has stopped since the summer. This has made the crypto market feel tired and confused, and many people have called the bull run over, blaming it on dying ETF hype, whales taking profits, or geopolitical uncertainty. But macro strategist and former Goldman Sachs executive Raoul Pal insists that this is not the end, but just a paused cycle caused by a severe global liquidity drought. This is because of tight financial conditions, the drama of the US government shutdown, and temporary capital flowing into tech stocks and gold. Pal says that the lack of liquidity right now is just preparing the market for the next explosive move. In contrast to previous cycles, which were closely tied to the 4-year Bitcoin halving script, Pal thinks that this one is now in sync with larger global liquidity waves that drive all risk assets. He also thinks that the true manic blow off top of this crypto bull market is still ahead of us and most likely won't arrive until 2026, which means that the best and wildest phase is still to come instead of already being over.
Entire hedge funds in the crypto space, because I've got the asset management business that invests in crypto hedge funds, rewriting their mandates to trade equities. And I'm this is a signal, generally speaking. And, you know, when you say, well, why have equities done better? What's going on? Why is crypto underperformed? Why is gold outperformed? It's all based down onto the same everything code framework. So gold is currently, gold used to be real rates. That used to be what gold traded on for a while, for a long period of time. It's now current financial conditions. Financial conditions lead by about 6 months Bitcoin. So when you put those, share the chart on X, it's like a perfect match. Is it going to match perfectly in the end? Who knows? But basically, it's living in the future gold or living in present financial conditions. Equities have been living in liquidity, as have crypto. But since the Fed shutdown and the draining of the reverse repo, there's been issues in the plumbing of the financial system. So liquidity has been drained out. And equities have a bid because everybody's structurally underweight tech stocks. It's a huge problem. I mean, every survey is like record underweight tech stocks, and yet they keep ripping higher. So they're having to chase, and then you've got the 401k flows that come in by the passive investing. But crypto doesn't have that. So what's happened is it suffered from liquidity over this weird period of tightness that's occurred, which was the rebuild of the Treasury General account and then their inability to drain it because of the government shutdown. They've got nothing to spend the money on. So it just keeps stacking up. It's $960 billion right now, and they can't spend it until the government reopens. And because the reverse repo is empty, there's no other liquidity measure they've got. So lo and behold, fucking repo market blows up or starts showing signs of stress, and the Fed have to step away from QT, and things will change a lot next year. There's a lot to come out of all of this. It's like the total three, so that's excluding Bitcoin and ETH.
Yeah.
Right. So we still haven't gone through where we were peak of the prior cycle, and it's been a slow crawl versus a speedy ramp. And this is because I think it's to do with the debt maturity got extended. So this is like a weird mid-year. Yes, I did imagine it was going to break this on this occasion. I thought in July it was going to break through. Not that I'd do anything about it. And then it had the big puke. But really, a pattern like this usually means that we will eventually have what we want. But it's the patience that's tested everybody. Because this has been a long period where a lot of this stuff has not gone to highs. And even then, it was January that everything else was at its highs, like SUI and everything else. And so everyone's been waiting 10, 11 months or 10 months to have anything.
There are endless arguments about X. Portfolio envy over Nvidia's gains, hedge funds getting rid of crypto mandates in favor of stocks, and everyone is sure they made the wrong choice in assets. Raoul Pal jokes that this is his monkey's throwing put indicator, which usually flashes right at emotional lows and cycle bottoms. He says that underneath all the chaos and pain, the real story is simple: the world's liquidity has been aggressively drained, stablecoin supply flat, nearly $1 trillion in the Treasury's account, and reverse repo facilities emptied. Unlike stocks, which have steady 401,000 in institutional inflows, crypto doesn't have this cushion, so when liquidity goes away, it just sits there. Extreme boredom and underperformance is not a sign that the bull thesis has been broken. Instead, it's the perfect conditions for a violent catch-up move. As soon as the government reopens, fiscal spending starts up again. The Fed cuts rates, SLR rules are loosened, and new money flows back into the system. Risk assets, including coins that have lagged the most, like Ethereum and Solana, tend to explode the most, turning today's loudest bears into tomorrow's desperate chasers. Powell doesn't see the current anger and sideways grind as the end of the cycle. Instead, he sees it as the tense calm before liquidity returns and crypto goes through the roof.
Everybody's on X saying,
Yeah.
Celebrating each 1,000 rise,
Yeah.
Bitcoin feels great at 150,000. I wonder how 151,000. When everybody's doing that kind of stuff, you kind of know that we're getting a bit effervescent. But also, when I look at it in macro terms, is all the macro tops have come with business cycle tops or the business cycle low. They've all come with liquidity tops, liquidity's expanding. And then when you look on a forward basis, we've got the government shutdown to reopen. That's going to open $1 trillion of flow out of the Treasury General account. We've got Fed rate cuts coming. We've got the changes to the SLR, which is the minimum requirements for banks. We've got potential balance sheet expansion coming. We've got China expanding its balance sheet. We've got the Trump tax cuts to come into place. We've got, the list is endless of liquidity that's to come. And we've got to roll $10 trillion of debt. So my view is we had this extended year, which was this year, because they didn't need to roll the debt because the debt got matured to 5 years. So we just had ongoing liquidity. And I think 2026 is going to be a banner year.
Can I ask?
I still think the end of this, I think November, December are going to be very strong here as well.
Raoul Pal's main point is easy but strong. Instead of looking at the dull weekly crypto charts, pay attention to global liquidity, as that's what causes all market booms. At the moment, a huge wall of money is being built up. The Federal Reserve is switching to cuts. The US Treasury is about to increase spending. China is growing its balance sheet, and about $10 trillion in US debt needs to be rolled over in the next 18 months. When that wall of liquidity finally hits, it will spark risk assets everywhere. That's why Powell says we haven't even reached the banana zone yet, which is his name for the crazy, euphoric top of the cycle. What we're experiencing now is just the long, annoying consolidation that always comes before the big moves and makes people really sure of themselves. If he's right and the peak is still coming in 2026, traders who buy on dips won't make the most money. Instead, those who understand the liquidity wave and wait calmly until it crashes will. To sum up, this isn't the end of the bull market. It's just the beginning of the most exciting part.